works quite a bit with VIX. He's been on CNBC, Bloomberg, all the stations, asked for his opinion all the time. So I won't use up any more of his time. I'll let you just go right at it, Mark.
That's awesome. All right. Hey, I wanted to thank the Candlestick people for inviting me along. This is fun. I'm really sorry about the technical problems. I promise this will be worth it. We're going to look at some stuff. We'll actually kind of talk about how you can use things as an indicator. I'm going to talk here about VIX versus SPX. You could just as easily use VIX futures and the ES or S&P futures against each other, or you could use VIX futures against spiders, or you could use VXX against spiders. So I happen to use VIX versus SPX, but they're all really usable. So today, here's what you're going to learn. You're going to learn what is the VIX, its intent, what makes VIX unique. We're going to use VIX to pattern SPX over time, and we're going to use VIX to help trade SPX intraday, and then I'll take some questions. All right? And I cannot see questions right now, so I'll if it's super important, hopefully there's a moderator who'll throw something out, but I'll go through everything at the end. All right? So the VIX, it is the CBOE, that's Chicago Board Options Exchange, S&P 500 Volatility Index. The purpose of the index is to gauge the buying and selling of options in the S&P 500, sometimes called the SPX. There's actually, everyone knows what SPY is. SPY has options. A lot of people know what the S&P futures are, SPZ or ES. They have options. And then there's the SPX, which is the cash index. That's traded on the CBOE. That has options. And the VIX is based on the cash options. All right? So it gauges, what I like to say, it gauges the cost of insurance. So, the idea is that when there's more people buying over selling options, generally the market is trying to buy protection. One concept that I think a lot of people fail to recognize is that options are not a speculative tool. They're similar to futures, all right? We're intended to be an insuring tool, all right? There are lots of people that like to, such as probably everybody here, that play futures or options in a speculative way. If you go down to the CME, one of the biggest clearing firms is Archer Daniels Midland, sometimes called ADM. And almost all of their clients are in using futures and using futures options and even using S&P options to hedge. And a lot of futures trading is done also to hedge S&Ps. All right? So options are an insuring product. So when there's more buying of options versus selling, that means people are buying more insurance. When people are buying more insurance, that means fear is up. All right? So when there's more selling than buying, the market is not seeking protection. All right? So just think about that. VIX up, cost of insurance is higher, and vice versa. Pretty simple. All right? Now, what is the VIX? You actually can't trade the S&P 500. You can trade a basket of stocks that is meant to represent the S&P 500. You can trade futures, which expire into cash, that expire into the cash of the S&P 500. But, even the best basket is transaction costs. All sorts of things that cause it. Basically, you can't actually straight up trade the SPX. What makes VIX kind of interesting relative to S&Ps is it's actually impossible to trade a basket of VIX options. All right? There is no one, I'm not saying it's impossible, but there is not a single firm that has figured out how to trade or how to recreate the VIX using S&P 500 options in an efficient manner. You could do it, but the cost of execution would be astronomical. All right. It is essentially a weighted estimate of implied volatility of the S&P 500 options that has a net duration of 30 days. All right. So that means a constant duration. Should be familiar to bond people. You know, if a bank is holding a huge portfolio of bonds, you know, they'll run a calculation that calculates the duration. And that's kind of, if you took the cacophony of all those bonds, what does the, you know, when is the net expiration? And then, so the VIX, it has a constant duration of 30 days, which means it's constantly kind of a mix of 2 months, the front month options and the second month options. All right. So right now it's actually entirely September, but next week it's going to be September and October. Last week it was August and September. So it's a combo of those months, and it's constantly weighting and reweighting things within SPX to get the VIX number. Now, the interesting thing is the weighting of the VIX puts the most emphasis on at-the-money options. All right. So that means the SPX closed what, 14.15 today. So the most weighting in VIX is the 14.10 options, 14.15, 14.20, 14.25 options. The weighting of the VIX actually puts more emphasis on out-of-the-money puts than on out-of-the-money calls. It's a little odd, and I don't know why they thought that was the right way to go. But interestingly, if puts get a bid and calls don't, or puts get a bid and calls get sold, the VIX may actually still read up. Anybody here know what a collar is? We know what a collar is? Actually, I know you're seeing the eternal mirror here. Yeah. So, on my shirt. Funny. A collar is when you buy an out-of-the-money put and sell an upside call. So the idea behind a collar, here, I'll show you what a collar might look like. Just real quickly. This will be quick. So a collar is, let's say you're long S&P 500 or spiders or name a stock, Apple. Okay? No? Dumbest thing I ever came up with. So a collar might look like something like this. So here's Apple. I'm a big dog trader, so I own I'm well off, so I own 10,000 shares of Apple. The guy that owns 10,000 shares of Apple, I want to swap wallets with. I'll be honest. We'll save it. All right. So now clearly this guy has a lot of risk. If Apple drops to $600, guy's out $350,000, and of course if it rallies, he's in good shape. So what a guy might do with a collar is buy a September 600 put, or he could buy a 610 put. That's $25 out of the money. And then he would go and sell a 660 call that is also $25 out of the money. And what he's done is he's now put a floor and a ceiling on his trade. And so it's essentially collaring the trade. So basically what I'm saying is when the cost of this collar, when the put becomes the more the put becomes expensive relative to the call, the more the VIX is going to rally. All right? The VIX does not use options with 7 days to expire. In fact, it only uses regular contract months. So because of that, it only uses, it doesn't use weekly options. It doesn't use any option that isn't a regular option. And it doesn't use options that have more than 61 days to expire. All right. The VIX is actually quoted as a price, but is really a percent. Volatility, despite not being spoken, is a percent. So if I say the VIX is 14.5 today, or the VIX is, then that's actually 14.5%. So one of the funny things I always laugh whenever I'm on TV, or whenever I'm on TV, no, whenever I'm or watching TV, and somebody will mention, oh, the VIX is up 10% today. So you're saying that a percent is up a percentage. A little weird. And it makes things all relative. So I actually look at the VIX purely in the points it moves. I don't look at it in terms of percent. Believe it or not. Now you can, typically the VIX, a 1% move in the SPX should affect the VIX plus or minus 6 to 7%. So if the S&Ps are up 1%, the VIX should be down 6.2% or so. And vice versa, if the S&Ps are down, the VIX should be up. So, there's this concept of volatility skew, which is caused by supply and demand of options. That collar, you think there are a lot more people looking to put on the collar this way, or do you think there are more people that want to put on the collar this way? What do you think? Which of the VIX ETFs trades most accurately to the VIX? The answer is none of them. They all stink long term. Yeah, most people are trying to buy the put. So it actually creates this concept of volatility skew that causes a supply and demand. And so generally speaking, you'll see puts are more expensive than calls. So as that curve is shifting, that's going to affect the VIX. Now, one of the interesting things, all right, because of this effect, even if volatility doesn't increase, all right, the action of the market dropping will cause the VIX to increase. So take a look. Here we are. In this one, we were around 1395. Okay? So we're right here. Can you guys see my cursor? Can you guys see my cursor? Okay, good. Want to make sure. So here we are at 1395. Now remember that we talked about how the VIX places a lot of emphasis on at-the-money options. So even if the VIX falls from 1395, even if the underlying falls from 1395 to say 1370, even if the curve doesn't move, because of that weighting, what would happen to the VIX? Even if it doesn't move, we fall from 1395 to 1367, even if volatility doesn't increase, what's going to happen to the VIX? It'll go up. It'll go up. Okay? Kind of interesting. All right? The VIX negatively correlates with the SPX. When the SPX is up, VIX is generally down. When the SPX is down, VIX is generally up. We talked about this correlation. The less volatile, the less the VIX will correlate with the SPX. All right? In highly volatile times, the VIX may negatively correlate at over 90%. And you can see how well these two kind of work together. They're almost like mirror images. All right? And believe it or not, I actually find the VIX to be a really good leading indicator. So, you can just kind of follow along. Every peak in VIX is met with a trough. You see that? Now, VIX is on the left. S&Ps are on the right. And every run in S&Ps is met with a lower VIX. All right, now, what makes the VIX unique? If I asked you what the average price of the S&P 500 was going to be over the next 10 years, could you guys give me an answer? What do you think? Yes, 800, 1,000. No, the answer is no. Come on. Everybody knows that. It will vary. Right. I mean, there's no way. The average price of the S&Ps over the 2000s was, I don't know, 1150. 10, maybe it was, I forgot there was a little bit of the bottom. Maybe it was 1500. In the 1990s, it was much higher, or it was lower. The 70s, it was in the toilet. Now, what about if I asked you what the average price of the VIX was going to be over the next 10 years? What do you think? You think I could give you an answer? Would I be asking this if I couldn't give you an answer? Give it a try. The answer is yes. The answer would be 20. Absolutely, the answer would be 20. Why? And the answer is volatility. Remember, the VIX measures volatility. Volatility is mean reverting. This means that over time, it hovers around an average. For the S&P 500, the VIX hovers right around 20. All right? So over a 10-year period, if you plus or minus about 1%, it'll be 20. If you look, it depends on the period to look at. If you looked at 1998 to 2008, it was lower. Or 1997 to 2007, it was lower. If you look at 2002 to 2012, it's higher. So it depends, but generally it's right around 20%. All right. So this presents with trading opportunities in VIX if one is so inclined to trade the VIX futures. And this is one of the really interesting things about the VIX futures. If you guys like trading, day trading, and spread trading, there is not a better vehicle that I have found to trade spreads with, calendar spreads, than VIX. That is an entirely different discussion. But it is an incredible vehicle. Now, when the VIX is, so one thing to understand is when the VIX is above 20, it will eventually fall back. When the VIX is below 20, it will eventually rally. Having that knowledge is a powerful weapon. It really is. All right, so there's another, this is another view of that similar chart. This is through the first half of 2011. I wanted to kind of show you guys how concurrent. You're right, it does appear to be concurrent, but you'll actually see some rally in the VIX before you see big sell-offs. Take a look in July. We actually started seeing a pretty big move up in VIX before we saw this huge sell-off. Those breaks are really the key. All right, when you see the VIX start to break against the S&P, so we're rallying the S&P or we're flatlining the S&P, and the VIX is rallying the entire time, that is very telling. So now let's talk about some multi-day patterns. The most important multi-day pattern is a correlation break. And you see these all the time. All right? When the VIX is breaking correlation, it's not exactly a mirror. And someone's asking, if the VIX is a mirror image of the S&P, how does it make it an indicator? It's a mirror image that kind of leads a little bit. Let's just say it's the S&Ps will shadow the VIX more than mirror the VIX. Okay? And let's get in. I want to pull up this chart again. So as I was saying, what you'll see with VIX, all right, is it will typically start moving before the S&Ps do. It may not make its major move with the S&Ps. Or it will make its big, huge run-up. It will peak when the S&Ps are absolutely getting trashed. But it'll start to move or change a little bit before the S&Ps. So one of the keys, and this is actually, I use this lockstep. I mean, this is my number one way of figuring out what the S&Ps are going to do, all right, over a couple of days. And this is how I set up my, a lot of my option trades develop a little bit slower than intraday. I mean, I'll trade over a couple of days, or if I'm trading VIX options or VXX options, I really want to know what's going on. So over multiple days, and this is almost lockstep. If you see the SPX up or S&Ps up and a flat VIX or only slightly down or slightly up, that is super bearish. So, last November, I wanted to show you, all right, so here's a good pattern, all right? Pattern one is a good pattern. You've got the S&Ps rallying, all right? And then on the downside, the red represents the VIX. This is a program called LiveVol. This is actually a proprietary VIX equivalent. Just full disclosure, this is not VIX itself, but it's very similar. In fact, almost exactly the same. So you've got the VIX selling off while the S&Ps rally. Now let's take a look at this pattern. All right, 2. Notice, you guys may recall, this actually ends. This one gets pretty ugly. All right. We get a nice pop. We get a nice rally here. The S&Ps are creeping higher. What is the VIX doing? Nothing. It's flat, slightly up, slightly down. It's not doing anything. This is a very clear signal to me that it's time to bail. And for those of you that don't recall, we took another dip down to, I want to say, like 1170 here. I'll look at a longer pattern here in a second. All right. So you have to actually watch. Just pull up a chart, look at VIX and S&P. If over a couple of days you notice, hey, the S&Ps are up, but the VIX isn't moving very much, or the S&Ps are up and the VIX is rallying with it, there is especially on a VIX up, SPX up, there is a high statistical likelihood that the S&Ps are going to sell off the following day. And correlation break 2. Another multi-day signal that the VIX can send is a correlation break on a down move. And down correlation breaks are stronger signals than up correlation breaks. Okay? Why? All right, well, what is volatility? If I ask you guys to define volatility, how would you define volatility? Fear, selling, variance is the best answer. Mark Bull puts it the best. Magnitude of movement, it's percentage changes, increases in variance. Right. Now, on a big up day, can you have a volatility on a big up day? Can you have volatility on a big up day, guys? Yeah, absolutely. So if we get a 40-point move upward, do you think it might make sense that the VIX, which represents volatility, might not fall as much as we might expect? Yes, Chet, that is the absolutely. Yeah, absolutely. So there are times, and this is why you have to take everything into context, there are times where on a big up day, the VIX does underperform. It's because we're actually getting some market volatility. All right? Now, what about on a down move? Can you think of any good reason for the VIX to underperform or to fall or to be flat on a big down move? Can you think of a really good reason? No, you can't. So over multiple days, if the SPX is down and the VIX is flat to slightly down or slightly up, again, this is even more bullish than correlation break 1 is bearish. And, this was that kind of same thing. We saw this, this was our correlation break that we were just looking at, right? Where VIX was flat and then we sold off, right? Well, then look at what happened. All right, you saw VIX drop, we rally. Now, take a look at what's happening here. This is Thanksgiving of 2011. We're getting that sell-off. What's happening to volatility? All right. You can actually see. Take a look. This stop in vol was right here, and we took off. All right. And for those of you that don't think this works, I called the bottom of the market on a public blog using this method. I was very proud of myself. Ahead of and I'm not bragging. It's just the way it is. This is a very effective way of looking at market relationships, and a lot of even the big houses don't get how to do this. It's shocking, but they don't. All right, now let's take a look at, and I'm sorry, this is actually incorrect. Every 15 seconds. I don't know how that got in there. SPX ticks are updated every 15 seconds, and so is the VIX. All right, active traders can use VXX versus S&P 500 futures. You can use VX. And I'll talk about VXX at the end because I know there's some people that probably don't get it, and so I'll talk about that. One important thing to pay attention to is the relative performance of VIX throughout the day. Again, relative performance of the VIX. The VIX on its own is almost worthless. In context of the S&P 500, it is one of the most powerful indexes. If the SPX is at the low of the day and the VIX is not at the high of the day, that is a bullish to neutral signal. It implies that traders are not rushing to protect from the down move. So here's a intraday chart, and what I want you to notice is that here we are in scenario 1. All right, you see the VIX is actually at the high of the day in that circle. It goes higher, but it's at the high of the day, and the S&Ps are at the low of the day. All right, so that's an absolute no signal. All right, what that's telling you is that, we're getting, even though we're at the lows of the day, we're probably going lower. Now, let's take a look at number 2. All right, what do you notice here? Well, at point 2 and point 1, the S&P is actually at the exact same level. Where's the VIX relative to the S&P at this level? About a point lower. The clear sign the market was not buying into this little temporary sell-off that we got. We got a nice little tank job here. And we did get a nice little blip, but if we were going to really tank. This was kind of a what we would call a pump fake in the business, and was actually a decent place to step in and buy. All right. It can also be a leading indicator for a sell-off. Believe it or not, VIX and VXX, VXX and the VIX futures for sure, almost always lead SPY, ES, and SPX by a good 5 to 10 seconds. So when the VIX is at the high of the day and the SPX is not at the low of the day, the SPX is absolutely going lower. Once the VIX begins to tail off, SPX will rally. Here's another example. This is from a different day. You can see it's from December 14th of last year. So here we are again. We've got the SPX at the low of the day, the VIX at the high of the day, SPX at the low of the day. And you see another one where the VIX starts to wane, really wane. And that was a good opportunity to step in and buy. You can see the two. VIX is waning. SPs are rallying. And again, we saw kind of that same thing. You saw the same thing here. All right, here's one from 322. All right, we'll play a little guessing game. So you've got scenario 1. You can clearly see the VIX is at the high of the day, S&P is at the low of the day. All right. Scenario 2, you can see the VIX gets that little peak but fails. and the S&P just straight up rallies. You actually see the little sell-off right here corresponds right here. You can actually see the timing. The VIX actually sells off several minutes before we basically take a nice rally. All right, so now let's take a look at a little pattern here. Here's one. Here's the S&P. Here's two, a little higher. Here's the S&P's a little lower. Here's three, a little higher still. Where are the S&P's going? Where'd they end up going, guys? What do you think? They went lower. So you can see if you watch how the patterns and how the relationships work, you can really take advantage of one. So here's one I pulled from today, just so you think I wasn't. And this is live. You know, I actually pulled this up while we were trading, while we were ticking. It's a 1-minute chart in this case. And you can see, hey, look, this is great, this is great. Now look at what happens here. You've got the SPX kind of near, not near the high of the day. Not near the high of the day. All right? But you have the VIX absolutely at the low of the day. I had a cohort in my office time. I said, you know what? We're going higher. And what did we do, guys? We went higher. There's your VIX high of the day. Not at the, and here's one where we're not at the low of the day. We actually did go lower briefly. So there's all sorts of opportunities to catch, you know, VIX signals. You've heard of mixed signals? I'm giving you VIX signals. You like that, VIX signal? All right, so in summary, the VIX is a unique product. Oh, here, you know what I was going to do? We were going to pull up and look at. And we'll go to, I'll even do tick if you want. Well, I think 1 minute's probably good enough, right? You can actually take a look. What time did I take that picture? It was 11:40. I mean, it was clear. I mean, we're at the low of the day. The S&P start rallying. It was a real simple trade. Went straight north. And I sold my spider calls that I was long. So the VIX can be a good leading indicator of the SPX, and it can be a great intraday indicator as well. So this is just a little offer. Take our silver course, which is an introduction to options. It also comes with our Option Pit Live service, which is a strategy letter that is updated multiple times a day. And Andrew, my business partner, and myself, we do 2 discussions, one for 10 minutes at 9:50 Eastern in the morning, and another one for about 45 minutes to an hour at 1:15 Eastern in the afternoon, where we talk about what we're seeing, what's going on in volatility, option trades that we think are good, both long and short term. It's a great way to learn, and our silver course is a introduction to options. We priced it about the same price as a book, and it's really, really simple. All right. So all you have to do, and I didn't put the coupon code on here. I'll give me a second, and I'll pull up the coupon code for the $89. Books are cheaper on Amazon. Yeah, but you're not going to get to hear the sound of my voice on Amazon, are you? All right, so let's take some questions. Mark, what did you make of today with the S&P up big and the VIX higher low than 3 days ago? You know, the one from 3 days ago, let me talk about Monday. Monday was actually a distortion from the actual calculation in the VIX because we had a month roll off, and because we had a month roll off and we didn't have and September had more than 30 days to expire. So that was what created that kind of weird occurrence. All right. It's CS VIX is going to be the CS VIX is going to get you our silver course for $89. Yeah, and the silver course doesn't come with, you know, books don't come with me yapping for 45 minutes to an hour a day. All right. It's I said Eastern, but so is that Central or Eastern time? Eastern, 12:15 Central. When the VIX is at the high today, SPX is not at the low today. The SPX will likely go where? Lower. Lower. Mark, what do you make of today? I never have to finish this question. Then 3 days ago. So we had that weird distortion where the VIX got completely improperly priced, actually, and it kind of fixed itself. Now, one thing you've got to be aware of, with a VIX of 14, all right, what daily percentage move does that imply in the S&P 500? With a VIX of 14. Anybody know? Less than 1%. Okay? So one thing you got to be aware of is if we're moving 10, 12 points, you know, a 14 VIX, I'll tell you, implies a daily move. A 14.5 VIX implies a daily move of 0.9%. Can you use VIX to help with Forex pairs? If you can, I don't know how to do it. You said you would explain VXX and how it's different from VIX. Sure. VXX is different. Sure, I'll talk about all those. Yeah, if you want the PowerPoint slides, all you have to do is shoot me an email, mark@optionpit.com. The VXX is represents a VIX future with a constant duration of 30 days. So I'm going to share my desktop again. So this is a cool website called VIX Central. And what it does is lay out how the VIX futures are trading. And you can actually see where the cash index closed. So the VXX represents a weighted number of August is September futures to have a constant duration of 30 days. So now let's think about what happens when you do that. All right. Has anybody heard the tale of Sisyphus? The Greek Sisyphus. He was he's the guy that was, he'd push a boulder up and then it would roll back down. Well, let's think about this. The VXX is a closed-end fund where it buys September futures, rides them all the way down to 1585, sells them, and then goes back and buys the October future. So there's this contango effect that actually is slowly depleting the VXX to nothing. Has anybody ever looked at a long-term chart of the VXX? I'm going to show you a 5-year chart of VXX on a weekly basis. So this is the VXX since its inception. You guys notice a problem here? The VXX is in the Bill Luby puts it this way, and I think it's brilliant. In the very near term, and by that I mean today, the VXX is VIX path dependent. Over the long term, though, the VXX is a slave to contango. Would I talk a little about VX, AZN, Apple, Google, and IBM? Yeah, I use them all the time. They're a great gauge to look at how cheap options are in those different products. Now, one of the problems with equities, which is different than the S&Ps, is that their vols move a little more herky-jerky. You can have Apple volatility rising as the stock is rising if it's running into earnings. Now, all of those are in the toilet. I think that a straddle in Google, a straddle in Apple, or a straddle in IBM are all looking ridiculously cheap. The silver course is, or the VXX price action today, it kind of corresponded with VIX. Does the silver trading teach VIX concepts or just intro to options? You will learn VIX concepts in the daily pit report that I teach, but not in the silver course. Some of my more advanced courses, which the silver course is included in, we really do dig into the VIX. I'm probably considered one of the 3 or 4 experts on the VIX out there. You'll learn a ton. Discuss using this for swing trades. Well, I think I just did. You want to, for swing trades, that kind of correlation break can be really great. Can you use put-call ratio to enhance predictive capabilities? You probably can. You find trend lines in VIX helpful? Well, the problem with the VIX is the trend line is going to be 20%. Where can I find VIX on a chart? Just type in VIX. Does your intro course? No, it didn't. Are there any tells in VVIX? Yes, absolutely. I think when VVIX gets oversold, gets too cheap, that's another signal that's a market bottom. Although the last time VVIX got too cheap, it did not. It was a false signal. So VVIX is a newer index, and it only goes. And they've only had VIX options since 2006. So it's hard to gauge whether it's really good, but I do like it. How do you calculate VIX percentage as a move in the SPX? Pretty simple. All you have to do is, all it is a standard deviation. So if you do 1 over, if you do the square root of 1 over 252, that's kind of will give you a one-day move. Yeah. It looks like U.S. dollar deflation since 1913. That's funny. So is this a coupon code for the discount? Yes. What is your blog on Twitter? Yeah, I'm on, my Twitter is @OptionPit, and my blog is on optionpit.com/blog. I update it daily. Today I basically said I think the S&Ps are going higher. Define too cheap. Cheap is a relative term. You know, I'm not a big fan of relative strength indicators in the VIX itself. And the reason why is because the VIX is such a slave of the direction of the S&P 500. You know, but I do think there's going to be pressure on the VIX to drop. Don't be surprised if we see a VIX touch 14. Hey, I'm cheap, but not relative. Huh. You know, I don't really, you know, I'll be honest. Most of my charting that I do is looking at volatility and historical volatility because I'm such an option trader. The directional trading I do is almost all VIX-based. And the problem, again, with VIX is that it's such a slave of mean reversion and a slave of the S&P 500. It's hard to use technical analysis on it. It really is. No, there's not a mining sector VIX. There's a VIX for EEM, a VIX for EWZ, for Brazil. There's a VIX for all sorts of indicators, but not, So does this work on a longer-term basis as opposed to intraday? Yeah, I kind of went through that in the presentation. If my silver course does not cover VIX, what does it cover? It covers the true structure of options. How do options work? Guy Hicks, yes, but the index is probably VXN that you want to look at. You know, anybody, you know what? Murray, I would say take a look at the time period of 2003 to 2007 and tell me whether you think that is true. The silver course covers really how options are structured. So it's going to cover things like quickly reading quotes, put call parity, buy rights. Yeah, VXEWZ. Put call parity. Now, what you'll get is when I'm talking intraday during my market discussions, you'll be able to listen, you'll be able to learn a lot there, and we do record all of those. How high will the S&P go at present? You know, if I knew that, you know, I'd be living on my island. I'd be living on Sebastian Island. Personally, I think we're going to hit some resistance at 1429. Do I have any courses that teach VIX? Yeah, the gold course. Do I sell the VIX indicator you were using? I do not. That is a sell signal. That is a sell signal. Somebody said, what does it mean when price is going up and so is VIX? It's generally a sell signal for me. I think we're going to see the S&P. Is there one for crude? There's two of them, actually. OVX. There's one on the Merck. There's actually the CME OVX, and there's the SIBO OVX. The gold course is 1950, but I would for you guys, if you call me and say you listen to this, if you give me a call or shoot me an email and listen to this, I'll knock off a few bucks. Actually, you know what? You can use gold 200. Take $200 off. That's how nice I am. Yes, it will. If the VXX is constantly contango, it's already a reverse split once. It's going to reverse split again. TVIX will do the same thing. I've made personally, I've made money just basically being short VXX for an extended period of time. Another way to do it is go long XIV for those that can't go short. XIV is the VXX inverse. I wouldn't go long VXX. Intraday, if you think that the VIX is about to pop for a short period of time, you can buy VXX. Or if the VIX futures are in backwardation, then you can go long VXX. Sure. Here's my cell phone number, guys. If you have any questions, call me. Obviously, don't text me dirty things or say any, or crank call me. I have a 2.5-year-old, so wouldn't want him to hear his dad say something rude. But yeah, guys, if you need anything, give me a call. Thank you. Can we just follow the candlestick to buy VXX? I don't know. That's Stephen Bigelow's candle. I would never make a candlestick assumption with Stephen Bigelow in the area. Yeah, thanks, guys. It was so much fun. Can I briefly define contango and backwardation? Yeah, contango is a state where the front month futures are less expensive than back month futures. All right? And backwardation is when front month futures are more expensive than back month futures. So right now, say corn. Where is corn trading? At an all-time high. So do you think corn futures are in contango or backwardation? What do you think? Corn futures, contango or backwardation? They're in a huge backwardation because of the drought. There's this thought. Yeah, they're super high too. There's this thought that right now corn is really expensive, but in 2014 it'll be cheaper. So that creates backwardation. You'll see that in VIX as well. When the VIX is really high, it'll be in backwardation. When it's low, it'll be in contango. VIX is usually low. For the last 4 days, VIX moved up the market too. Is that a sell signal? I think we're arranging a top. Oh, you know what? I am I've been to Arlington Heights many a time. I'm going to be. I'll be out. Tell you what, we can meet at the Rainforest Cafe at the mall out there for lunch one of these times. You can ask me all you want to know about VIX. Or come down to the Board of Trade. I'll take you around if you ever want. Yeah, anybody's in Chicago, give me a call. I'll take them around the Board of Trade. I have a press pass, so it's nice. So SIBO as well, if you're interested in seeing the SIBO. Although I'll tell you, oh, nice. I almost moved to, I may end up moving to Park Ridge. You and, I want to send my Hillary Clinton from Park Ridge. I said it could be. I'm just, yeah, the interesting thing, my neighbor was actually from Park Ridge growing up in Hinsdale. And so she actually spent a day at the White House when the Clintons were in office because she had been best friends with Hillary at Maine East, I believe. And yes, I think that we are getting to a top. But yeah, and this goes to all of you. If you're in Chicago and you want to come see one of the floors, call me, shoot me an email. I'll arrange somebody to take you around, or if I can't do it myself. All right, guys, I just want to say thank you so much for having me here. It was an absolute pleasure. Steven's going to come on our website. Gotta love Schaumburg. Love Woodfield. Steven's going to be coming to our site to do a webinar next week. I can't wait to have him. He's such a nice guy. I'm sorry about the technical problems, but I hope it was worth the wait. And with that,
Mark,
I'll drop in. Oh, sorry, Steven. Thank you.
That's all right.
Thank you so much.
Just want to thank you very much. Very good stuff. I tell people the more information they can learn that somebody's using something successfully, the more probabilities they have of putting in their own trading program and making it work for themselves. So I appreciate you
Couldn't agree more.
Doing the presentation. It was great to have you here.
Thanks, Steven. I couldn't appreciate it more.